Hello there, this is binaryoptions.com, and we are looking at the euro and Great Britain pound. We like to make a trading plan for next week, as on the 31st of March the month is ending or the month is closing, and we like to look at it from the Japanese candlesticks technique point of view. What does it mean? That it means that we can have an idea about the future price to come based on what the market is doing at this very moment on each and every candle. Now, the bigger the time frame, the bigger the implications, and there is no bigger time frame than the monthly chart in here. As it proves to be here, this candle here, which is not completed yet, as you can see, this candle here is forming a possible or can be part of a possible bullish engulfing pattern, but if and only if market goes and moves a bit more to the upside. If it moves, so now the pattern is like this. Let's try to take a line to the downside. We have a strong candle to the downside in here. Let's make it big like this, and it is with red signaling that it is a bearish pattern. So we have a bearish pattern to the downside, and it is being followed with our candle in here. Let's clone this one and let's try to make it green like this. So we have another candle now all the way to the upside. Let's make it in like this, and let's make it in black like this. And right in the middle of it, or a bit higher, we have a green area, and this area from here is this area from here, like we are now. In this arrangement, if we close next Wednesday somewhere around this level, so somewhere around 72.84, it is still looking like a possible, it signals uncertainty. If we close with this one like this, then this is being called a doji, so it signals uncertainty. However, if market goes from this moment on a bit more to the upside, something like, I don't know, 27, 72, 73.50, stuff like that, so something like, let's try to take a line, something like this into 73.50 area, then it will form a hammer. A hammer is a bullish pattern, and it's a reversal pattern. So if this one goes and moves something like this, and it is a reversal pattern, so it might be very difficult for traders to overcome this pattern. Now, what to do then next month? Well, this hammer, if it is forming a hammer, which I think is going to form, and this hammer is going to be treated in the following manner. Wait for market to retrace out of the whole candle from top to the bottom, to retrace something like 61.8 or 50% before going and buying call options. And the expiration date should be, of course, as big as possible. So I wouldn't go on one day or stuff like that, but I would go with 1 week or maybe even end of next month expiration date, depending on your level of confidence. In our case here, trying to find out 50% retracement or 61.8 out of this high and this low means that we should go and buy call options like this. We should go and buy call options at, let's try to find out a bit the level, something like 71.96, 71.93. So I would say the 72 level is a very good place to buy call options, if again we will have the hammer that we want. So basically we should wait for market to go 73.50, then waiting for a retracement into 50%. If you want to trade put options from that level would be also nice, but it's more difficult to pick the right expiration date, while here we have the entry price and also the or the striking price, and also the expiration date. So let's write here, on a hammer formation on end of March, wait for 61, or let's say 50% and 61.8 retracement before buying call options with 1 week or month expiration date. This is how you trade a hammer, if of course it's going to be to appear. Thank you very much for being here. Have a great day. Bye bye.